Welcome boys to a quick recap of the trade that I took today on NAS100 that made me around 7% on my 10k evaluation. I trailed this from a 3R to a 4.2R win right here, and this was on both the mech variation and the hybrid variation of the model, so depending on which one you're trading, you could definitely have taken this trade, and we're going to go through exactly why I took this trade. So the first thing we need to establish is our daily bias. Where do we think price is going to go? Is it going to move up or is it going to move down throughout the day? Now, the easiest way to do this, and the mech variation of this, is to use the 4-hour time frame and look for the fractals. So if you haven't already, install the fractals indicator by Rachel T, and on the 4-hour time frame, you're just going to look for the most recent fractal. Was there a break of structure, which is a candle close above or below? So this is a low, so we're looking for a candle close below it. Was there a break of structure to this one? No. We go to the next one. Was there one here? No. Go to this one? No. If it wicks through it like this doesn't count. We need a full candle close. Then we go to this one, draw a little line across. Yes, this candle right here closed below this low. So that confirms that we are bearish for the day on the mech bias. As soon as we've got our bias, we need to mark out the previous session right here. So we're coming into London session at 8 o'clock and we need to mark out the previous session, which is Asian session. Now this happens from midnight UK time all the way up to 8 o'clock UK time. So I'm on the 1-hour time frame right here and I just marked these sessions out. You can use an indicator if you want, but I kind of like to just draw these lines and keep it a lot clearer. Then you're going to find the highest point in Asian session. So because we are bearish, we're looking for this overall downtrend. We're looking for a sweep of some liquidity and then a continue on in this direction. So we need to mark out the highest point in Asian session right here, which is just here. And all you're going to do on the 5-minute time frame is zoom in right here and just wait for the sweep. That's all you need to do, is wait for the first confluence, which is the sweep of this liquidity, which we get right here. So as soon as we've had the sweep, we need to wait for the next confluence, which is the fake out. Now the fake out is a fake move in the direction of our bias, followed by an actual move back up to stop out the people that got in too early. So as soon as we've had this sweep of liquidity, there will be people that get in right here and they'll have their stop loss just above the high and they'll be targeting some discretionary liquidity or something like that. And we are basically waiting for that to happen. We kind of know this is going to happen because it happens quite a lot, and we're waiting for a bearish candle right here, followed by a move back up. Now this can get a little bit complicated, especially if it is the manual fake out, but right here we're going to wait for the first bearish candle to form, which we get right here. Now all we need to do for the fake out is grab the fib tool, draw it from the lowest point in the previous session and the current session all the way up to that bearish candle. Now what happens here, and I'll do a full in-depth guide on the manual fake out in just a bit, but right here what we usually look for is the candle closes like down here, and we're looking for price to tap back into this zone, this fake out zone that we call right here. Now in the event that this candle forms inside of the zone, the next candle that prints is going to form inside of the zone. It's going to instantly fake out, and there's not much of a confluence if it instantly fakes out, right? When this prints, so it opens at the top and closes here, so the next candle is going to print down here. It's just instantly going to be in the zone. So what we do in this case is we draw about 33%, roughly, give or take, of the top of the move right here. And this is our little fake out zone, is around 33% of this candle. This probably isn't the most accurate way to do it, but this is just how we do it. And now we are looking for price, now it's closed out of here, to come back into this zone right here. So we're going to wait for that. We're going to play price and see what happens. And you can see right here we get this tap. We zoom in just a bit. This tap right here is the fake out completed. So we've got the fake out done, so we can remove the fib, remove the box, and now we are looking for the next part, which is the break of structure to the fractal. Not just any break of structure, it has to be to a fractal like we did with the bias. So I'm just going to wait until a fractal forms, which we get right here. I'm going to draw a little line saying this is the fractal, maybe set an alert if you can't be on your phone the whole time. And we're going to be waiting for price to break. Now we've got a new fractal, so we're going to move the line back up here. Now we've got this little wick, that doesn't matter, we need a full candle close. So we're going to wait for this to happen. New fractal over here. And right here we get the candle close. So let's make sure we draw this nice and accurate right here. Now this candle wouldn't count because it didn't close. This candle did count because it closed below it. So as soon as we've got this, we're ready for the actual entry of the model. So the way we get the entry is by drawing the fib tool from the highest point all the way down to the lowest point right here. And all you're going to do, this is super simple with the fib tool, is you're going to set a limit order on the 0.618 right here. You can set it anywhere between this Goldilocks zone. It can be on the 0.618 or the 0.5 or anywhere between. The 0.618 is going to give you much better entries when you enter. It's going to be a lot more precise. You're going to be able to target more R for kind of less of a move. But the 0.5 is going to give you a lot more entries. There'll be times where it just taps here and then reverses all the way down here, and you wouldn't get in if you were on the 0.618. But the 0.618, for me at least, has always had better data. Then you're going to move your stop loss to the 1.025, which gives a bit of breathing room right here in case it needs to resweep. And then you're going to set a fixed 3 risk to reward. We're not targeting levels, we're not doing anything like that, just set a fixed 3 risk to reward. And now we're just going to wait. So we're going to wait for price to tap in, which we don't get right here. And right here, this is our tap in. And now we're in the trade, now we're waiting. And you can see price came up, doesn't matter, we stay stoic, it doesn't matter, come all the way down here. Even though we've swept a bunch of this, but we haven't quite hit TP right here. Do we move to break even? Do we manage the trade? Do we take partials? No, none of that. We fully set and forget, fully leave it until it hits take profit, which we get in just a sec right there. See, this is a perfect example. If you move to break even, you would have got stopped out and then it would have continued on in your direction, which is really not what you want. So stay stoic, even though it kind of fucks with the head a little bit. If that is the case, just get off the charts, don't look at it, and just wait for either SL or TP to be hit. If you have got to the point where it's hit 3R, you can use the trailing stop loss rule if it's continuing to rip to get a bit more of the R gain. Now there's a few ways to do this. A lot of people like to use the 0.4 rule. So they wait for price to hit 3R, then they move their stop loss to 2.6, so 0.4s away from the actual TP, and maybe they draw a little box and then they follow price down for 0.4 all the way down until it until it comes back up and then hits stop loss. I do it a little bit differently and I do it in bigger chunks, so I managed to catch it down to 4.2, I think is what I got right here. So this would have stopped out a lot of the guys that used the 0.4, but I kind of do it in like 1R increments, so it came all the way down here to 4.2 and then stopped me out right here. So this trade managed to get me, I think, around 7%. I'll put it on screen, around 7% of my 10K evaluation. And yeah, that was pretty much it. Thank you very much for watching. Hope you guys enjoyed it, and I will catch you guys in the next one.